Have you ever wondered what a £2.5 trillion debt actually looks like? That's 2.5 trillion with 12 zeros. It's a number so huge, it's hard to even imagine. But this isn't a thought experiment. It's the reality of the UK's national debt. And right now, that mountain of debt is causing a crisis that affects every single person in the country, from the price of your weekly groceries to the future of public services like the NHS. So, how did we get here? How did one of the world's leading economies find itself in such a precarious position? And more importantly, what happens next? In this video, we're going to break down the UK's debt crisis. We'll look at the decades of decisions that led us to this point, the economic shocks that pushed us over the edge, and the frightening reality of what could happen if this debt spiral continues. This isn't just about big numbers and economic jargon. This is about your money, your future, and the stability of the entire UK economy. Stick around, because you need to know this. To understand the UK's debt problem, we need to rewind the clock a bit. It's not something that happened overnight. Think of it like a credit card. For years, the government has been spending more money than it brings in through taxes. This gap is called the budget deficit. To cover it, the government borrows money by selling something called gilts, which are essentially government bonds. Investors like pension funds, banks, and even foreign governments buy these gilts, lending money to the UK government with the promise of being paid back with interest. For a long time, this system worked pretty well. Interest rates were incredibly low, meaning the cost of borrowing was cheap. So the government could afford to borrow for things like public services, infrastructure, and responding to emergencies. But a few major events completely changed the game. First, the 2008 financial crisis. To save the banking system and stimulate the economy, the government had to borrow huge amounts of money. The national debt, as a percentage of our economy's size, or GDP, shot up dramatically. Just as we were starting to recover, another major event hit. The economic uncertainty and changes to trade relationships put another strain on the UK's finances. And then the final 1-2 punch, the COVID-19 pandemic and the energy crisis following the war in Ukraine. The government spent hundreds of billions on things like the furlough scheme, business loans, and energy price caps. These were vital to support people and businesses, but they added an enormous amount to the national debt, pushing it over 100% of GDP for the first time since the 1960s. So, we have this massive pile of debt. Why is it suddenly a crisis asterisk, now asterisk? The simple answer is interest rates. For years, the Bank of England kept interest rates at historic lows to encourage spending and growth. But now, to fight soaring inflation, the fastest rise in prices we've seen in 40 years, the bank has had to hike interest rates aggressively. And this has a massive direct impact on that £2.5 trillion debt pile. Remember those gilts the government sells? When interest rates go up, the cost of borrowing for the government also goes up. The interest payments on the national debt have exploded. We're now spending more on debt interest than we do on the entire defense budget. Let that sink in. Billions of pounds that could be spent on schools, hospitals, or police are instead going straight to investors just to service our existing debt. This creates a vicious cycle. Higher interest payments mean the government has to borrow even more just to pay the interest on what it already owes. This is the debt spiral. At the same time, the high interest rates that are meant to fight inflation also slow down the economy. It becomes more expensive for businesses to invest and for people to borrow, which can lead to lower growth, job losses, and even a recession. When the economy doesn't grow, the government gets less tax revenue, making the deficit even bigger. It's a trap. The government is caught between a rock and a hard place. On one hand, they need to get the debt under control. The traditional way to do this is through austerity cutting, public spending, and raising taxes. We saw this after the 2008 crisis, and it was deeply unpopular and painful for many. But with public services like the NHS already stretched to their breaking point after years of underfunding and the pandemic, there's very little fat left to trim. Major cuts would be politically toxic and could do serious damage to the fabric of society. Raising taxes is also incredibly difficult. The tax burden is already at a 70-year high, squeezing households and businesses even more when they already struggling with a cost of living crisis could choke off any chance of economic recovery. So, option 1, austerity and tax hikes, is a tough pill to swallow. What's the alternative? Some might say, let's just grow our way out of it. This is the holy grail of economic policy. If the economy grows faster than the debt-to-GDP ratio will naturally fall, and the problem solves itself. It sounds great, but it's easier said than done. The UK has been struggling with sluggish productivity and low growth for over a decade. Kicking the economy into a higher gear requires major long-term investment in infrastructure, skills, and technology. But where does the money for that investment come from when you're already spending billions just on debt interest? This is the government's dilemma. Cut spending and risk crippling public services and the economy. Raise taxes and risk a public backlash and a recession. Or hope for a miraculous burst of economic growth that seems perpetually out of reach. There are no easy answers, and every path has significant risks. So, what happens if we can't escape this debt spiral? What's the worst-case scenario? Let's be clear, we are not talking about the UK going bankrupt in the way a company would. A country that controls its own currency, like the UK, can technically always create more money to pay its debts. But that would lead to its own catastrophic problem: hyperinflation, where the value of the pound would collapse and your savings would become worthless. The more realistic danger is a slow, painful decline. It's what some economists call a doom loop. The government keeps borrowing more to pay its bills, interest rates stay high, and the economy stagnates. Public services get progressively worse as they're starved of funding. Living standards fall. Our international standing diminishes as investors start to see the UK as a riskier bet. They might demand even higher interest rates to lend us money, which just makes the debt spiral worse. We got a terrifying glimpse of this back in 2022 with the Liz Truss mini-budget. The markets reacted so badly to the prospect of unfunded tax cuts, which meant a huge increase in borrowing, that the value of the pound plummeted and the cost of government borrowing skyrocketed. It was a crisis of confidence. The Bank of England had to step in with an emergency bailout to prevent a collapse in pension funds. It showed just how fragile the situation is. If international investors lose faith in the UK's ability to manage its finances, the consequences can be swift and severe. This isn't some distant, abstract economic problem. It has a real impact on your life. High government borrowing can crowd out private investment, making it harder for businesses to grow and create jobs. The pressure on public finances means longer waiting lists for the NHS, bigger class sizes in schools, and potholes in your roads that never get fixed. The high taxes needed to service the debt leave you with less money in your pocket at the end of each month. The economic uncertainty makes it harder to plan for the future, whether that's buying a house, starting a family, or saving for retirement. Essentially, the country gets stuck in a state of managed decline. We become poorer, our public services weaker, and our future less bright. The social contract starts to break down as people feel they are paying more in taxes but getting less in return. This can lead to social unrest and political instability. It's a bleak picture, but it's a possible future if the UK can't get its debt under control. So, where do we go from here? Is there a way out? Escaping a debt trap of this scale requires a combination of smart policy, political courage, and a bit of luck. There's no magic bullet. First, we need a credible long-term plan to stabilize the public finances. This can't be based on fantasy economics or short-term political gimmicks. It needs to be a serious, transparent strategy that convinces the financial markets that the UK is a safe place to invest. This will likely involve some difficult choices on both tax and spending, but fiscal discipline alone isn't enough. As we've said, you can't cut your way to prosperity. The most critical element is a realistic plan for economic growth. This means tackling the UK's deep-seated productivity problem. It means investing in the skills of the future, from AI to green technology. It means reforming our complex planning system to make it easier to build the homes, labs, and infrastructure we need. It means creating a stable and competitive tax and regulatory environment that encourages businesses to invest here for the long term. This kind of long-term strategy requires political consensus. The constant chopping and changing of policy we've seen over the last decade creates uncertainty and deters investment. Whoever is in power needs to build a broad agreement on the long-term direction for the country and stick to it. This is perhaps the biggest challenge of all in our polarized political landscape. Ultimately, the path out of this crisis is a narrow one. It requires balancing the books without crushing the economy and fostering growth without letting borrowing run out of control. It will take time, patience, and a level of political honesty that has been sorely lacking. The UK has faced enormous economic challenges before and has always found a way through. But make no mistake, the scale of this debt crisis is immense, and the stakes could not be higher. The choices made in the next few years will determine the UK's prosperity and its place in the world for a generation to come.